Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 107, NASDAQ off 44, S&Ps are off 17, gold contract up $13.60, trading at $1,204 an ounce. Silver up 8 cents at $16.34 an ounce. Platinum up 10 at $1,233 an ounce. Copper flat at $2.90 a pound. Light sweet crude down $2.64 at $63.22 a barrel. Bonds. The ever-ready bond market, folks, had rejected lower price today, did it with lighter volume, and then took off topside. You get the 10-year up 9 ticks at 126.06. 30-year up a full point at 142.17. King dollar down 278 ticks. That's we're trading out at 89.29. That's after going to a higher high today. It is testing the 2008, 9, and 10 swing highs. The only one it hasn't hit yet is about 24 ticks away from one of them. Bottom line, we'll see whether she wants to go after it. The way the dollar has been trading, however, it's telling me that this is the topping out of the dollar. We'll see whether what type of a pullback we're going to get. The reason for that stands is specifically that they can't whack the gold market down. As the dollar kept getting into highs, gold refused to go to lower prices. As we moved through this trading day, gold actually got more strength. The equities got more strength. They want to go topside. Dollar wants to go downtown. S&Ps want to go downtown. Bonds want to go uptown. Euro up 39 ticks at 123.23. Yen is down 93 at 120.53. The yen goes along with that whole scenario too, folks. So it's pretty cool, all the different correlations that are taking place simultaneously. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So in the world of the S&Ps, let's take a look at them. We got a cash S&P right now at 2062. What we are going to have out here today is an expansion of volume as we have moving to lower price. Right now on the NYSE, we're at 495. That says it's going to come in about 800 million. On the NASDAQ, we're trading out volume-wise at 1.48. That means the NASDAQ's going to come in about 2 billion. So what you have here is that we are coming off the highs. You get an expansion of volume. If we go over to the NASDAQ, we take a look at the NASDAQ for a second. What you'll see inside the NASDAQ is down 45 bucks. You're into the swing point from the 1st of December. That low of that swing point is 47.24. We've hit 47.22. We're hitting that swing point with the expansion of volume. That's saying it's going to basically do a hammering into it. The composite next stop will be for the composite to run down to the 46, 44 level. Dow Industrials. We take a look at the Dow. What we have with the Dow is this. Dow come off the high. Expansion of volume. You know, the first stop where the Dow wants to try to get into is 721. Right now we're at 849, down 100 bucks. Russell 2000, same deal with the Russell 2000. What you have with the Russell is the only one that had not got to its highs, folks. The highs in the Russell were generated out there in July 1st of 2014. Russell bottom line is coming off these highs out here today with a small expansion of volume. Now, let's go over to the XLE for a second. Well, actually, yeah, let's go to gold. We go to the gold market first. It's what you have. Gold out here today, rejected lower price, had lighter volume in the rejection. Right now, you're up $14. This expansion actually started coming up late in the day. The expansion, we had just gone at 1350 hours. We went from 1194 to 1204. And that 1204 was coming into the downdraft that had been created on Friday. But they couldn't whack gold on Friday. And that was with the dollar index going to highs. If we go to the XAU and the HUI, both of those indices, okay, this is about as clean as you get. If you do get the gold report, you know, in the update today, bottom line is that when this is out in the morning, it's pretty amazing, actually, what the gold market, the XAU and the HUI were doing. They were coming into the November 14th sign of strength. They were doing it with dramatically lighter volume. They rejected that price. They're above that price right now. And what you have set up here is a small ABC structure on the way up. Well, actually, it's a fairly large ABC structure on the way up. We'll see how the XAU goes after this 75.27 area. Right now, you're at 71.03. We go to the HUI. We take a look at the HUI. The HUI right now is trading out at up 259. We are at 168.59. The B point on this is the 181.33. We'll see how that hits it, but it looks to me like in both cases that baby's going topside. Oil. We go take a look at the oil market. There's smoke in the oil market once again. Now, what you have here is this. Oil, first off, wanted to test its high volume low. It got into the high volume low, and it's trading below it right now. The high volume low was generated on December 1st. That's when we came down. Big time volume, $63.72 we hit. We had done that with 504,000 contracts. Today we did 290. We're below that. That's saying that on a larger basis, I believe we get $55 coming at us. Let me just look at this again. So we get 80. In fact, I'm going to put this on a continuous contract. This oil is going to go a lot lower. So if we take a continuous contract, we'll put this on a weekly. Oh, man, that's vicious. Holy cow. Oh, I see what we got. Okay, that's how I was doing this. Okay, so we got 77. Oh, man, 87, 97, 107. Ooh. Okay, conservatively. Let me put this on a monthly for a second. Because I was just trying to do this conservatively, folks, and it was like, it was coming in so low, it was hard to believe. Okay, so, first leg down here, $54 and, so $55 on this contract. And where I'm going with the $55, folks, is this. $55 is the high of the December 08 lows. That's how dramatic this is. Now, check this out. This is what's amazing, too, is that bar, the high of that bar is $55. The low of that bar is $32.40. So if we get into that bar with expanded volume, just the price, never mind the volume, we get into that bar with expanded price, you'll go to the bottom of that bar. If we go to the XLE, we take a look at the XLE. XLE is under the October 15th swing point, and this October swing point is crucial to understand because the S&Ps, the Dow, the NASDAQ, it's all going down there. That is $77.51. In this case, and the XLE had done a counter-trend bounce all the way up to 89. Comes back down, comes down with some juice. You're breaking that level right now, and what that sets up is, so you got $100, 77. I'm ballparking. It's at 23. Man, this is a big number. 90, 80, 70, $67. $67 is coming at us in the XLE. And inside that XLE, these babies are getting basically hit out here today. You get Exxon down $1.99. You get Schlumberger off $2.98. Oxy's down $4.60. Man, that thing is so volatile. It's amazing. Apache's off $4.05. ConocoPhillips is off $2.68. We go over to the, this is what has changed out here, too, by the way. You go over to the financials. The financials thus far, they're up 11 cents. The XLF, rather, we're at $24.93. The number to keep your eye on out here today is $24.91. If they can keep it over $24.91, you can keep the higher price. It goes under $24.91, that thing wants to go south and go south quick. That's on the daily. On the monthly, folks, the XLF is a mess. The XLF, last month we did 434 million shares. That was going into 5.7 billion. The XLF is not going anywhere. They're hanging it up there. It is staying up there. Bottom line, not enough juice. 10-year bond. We go take a look at the 10-year. What we have with the 10-year is this. 10-year bond today got down to a price point of 125.17. Rejected that lower price. We're trading at 126.06. The October 15th spike bar is 126.21. She's going to make her way inside there. It's the high of October 15th that these bonds want to get their head wrapped around. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials down 100 right now. NASDAQ's off 41. S&Ps are off 15.5. Gold is up 14.60. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 111. Nasdaq's off 44. S&Ps are off 17. If we go to that 30-year bond, we take a look at the 30-year. What we have happening with the 30-year, folks, is this. 30-year rejected lower price this morning. Goes topside. 275,000 contracts, and this is what the most crucial deal with the 30-year is. We're at 142.17. The bottom of the October 15th bar, folks, is 141. That's almost 2 points into the bar. This thing is going topside. I suspect what we're going to see, the 143.09 level, which was the high that was generated December 1st, that's going to get blown away in about 2 seconds. Not 2 seconds, maybe 2 days. When it hits up there, though, it'll just slice right through it. And what you'll see is that you'll see that expansion that's going all the way up to that 146.16. That is one big number, folks. And what that is telegraphing is it's telegraphing that this S&P more than likely has started its march down to the October 15th swing low. Now, when you take a look at the October 15th swing low, that's a long way from where we are. We're at 2059. The top of the swing low is 1874. The bottom is 1820. So we'll see how we make our way down there. But the bottom line, the oil services are already into it. They've broken it. A lot of other equities have actually broken it. So we'll see how this does shake out. Some of the high-volume stocks, and I suspect we're going to have a little high volume out here today. Apple's down $2.55. You get Halliburton off $1.60. Kinder Morgan's down $1.27. GM is off $1.25. You got Chesapeake Energy down $1.15. Some of the Dow stocks out here. Oh, Big Mac. Yeah, Big Mac's getting smoked. Big Mac is down $3.51. Caterpillar's off $2.90. If we go over to Big Mac for a second, what you're going to see, this is pretty dramatic. This is a change of, I suspect, business in Big Mac's case. They have huge amounts of competition. On a fundamental basis, they have huge amounts of competition. Better food at different fast food restaurants. They're getting smacked. Year-on-year sales are down 6%. That's a huge number. Big Mac is down today on 9.5 million shares. We're at 92.76. If we take this, we put this back a few years. I'm going to put it on a 10-year chart. What you're going to see is that you have been going sideways since October of 2011. Now, the first big test on Big Mac, well, first off, we're at 92.76. My take, Big Mac wants to go to 64. So it's a big number on the way down. Where the crucial test is going to come in is how it comes into the $88.13. And what is intriguing here is that if I go over to, let's go over to IBM, because if IBM has been going sideways, huge amount of time, same time frame, 3 years. Big Blue today is down 128, and we're 2.1 million shares. Now, the swing low on Big Blue is 160.05. The volume today is light. It's going to go after it. The real key is going to be, as you go after that lowest swing point, will that volume increase? Right now, it has not increased. We'll find out if we do get that break with volume on the way down. When I take a look at Big Blue's on its way down to 116, and right now you're at 161, so that's pretty intense. The first place that it could get major support is 157, but it's going to have to stop in its tracks, because if it doesn't stop in its tracks at 157, that thing's going to fall out of bed down there at a 116 level. So it's certainly a big number when you take a look at. If I pull up the Dow Industrials today, if you want to see what's hammering it, of course, you got Chevron is moving it lower. That's the first one. Big Mac is second, down 351. Caterpillar is third, $3, and ExxonMobil is $2. Bringing it up, even though it's down, is United Technologies up the $1.55. Merck is up 63. American Express is 95, and Verizon is 48. Let's go to, there we go, 1 second. John in Westford, Mass. Hey, John, what's going on?
Hey, how you doing, John?
I'm doing great, man. You having a good day out there?
Yeah, trying to. It's a little cloudy and cool up here, but we're doing all right. I wanted to see if you could take a look at dry ships for me. I was looking to buy it at about the 120 mark, and it's just blowing right through that. So I don't know if we should stick a fork in it. Or...
Yeah, stick a fork in it. Don't touch it. Okay, so let's take a look at it. You get dry ships. The low is 81 cents. That's today. The high is $5. This little baby, broke swing points out here today with big volume. So yeah. your A point on this, you take where the gap is, which is 192. Conservatively, don't touch this thing, man. This is in trouble, big time.
Yeah, I don't know. Looks like they may be going under.
Yes, they can. The way this is trading down right now, let me just see something else, how the rest of these are trading down. So, Diana's down 18%. Let me pull up Diana for a second. Okay, so Diana, there it is, 1 second. DSX. She's down with volume, too. Yeah, don't touch any of these, man. Yep.
All right, sounds good. Thank you.
Okay, have a great one, man. Have a safe one. Let's go to Kim in Denver, Colorado. Hey, Kim, what's going on?
How are you, Tommy? How are you doing today?
I'm doing great, man. Nice to talk with you. How you been?
Yeah. Hey, I was listening to you talking about oil possibly going down to like 55.
Yes.
Can I get a stop for, I'm going to raise my stop for Doug, D-U-G.
Yeah, let's take a look. You got Doug, D-U-G. Doug is, folks, the 200% inverse correlation of the oil and gas index. The low's 36, the high's 58. And what to do on this, so what Doug is doing right now is that it's coming into its high swing. You get a high volume swing at 58, excuse me, 58.79. And I would put it, there's no reason to give this any room at all because it just went from 44 to 57.
Yes.
Let me just see this intraday. Oh, this is going to be interesting, too. And you had someone pile in right at 1450. That's nice. I'd put it under 56.53. Don't give it even the full day. Oh, 1 second, 56? Yeah, 56.53. Where I'm going, Kim, if you're watching Tiger TV, you see that spike at 10:40 this morning?
Uh-huh.
Just, I'm tacking it right underneath there. I wouldn't even give it to the bottom. Just give it right there because...
56.53?
Yes.
Okay. Cool.
Okay, man. Have a great one.
Merry Christmas.
Hey, Merry Christmas, man.
Thanks for the Go Report.
You're welcome, man. Have a great one. Have a safe one.
Talk to you again. Bye.
Thanks. Let's go to Mike in Thailand. Hey, Mike, what's going on?
Hey, Tom, how are you?
Doing great. You having a good day?
Okay. Can you hear me?
I can hear you loud and clear, man. You're just like you're right in the next room.
All right, good. Yeah, because I just had the den on, and I didn't know how to shut the volume off on the den, and
What do you want to look at, Mike?
AG.
AG. So let's take a look at it. You got First Majestic Silver. This hit a low out here today, low at 375. The high's 12.45, and you just stay right there. We'll do a quick break. And we're going to be coming right back. Our phone number is 877-927-6648. Dow Industrials right now are down 93. Nasdaq's up 40. S&Ps are off 15. Gold is up $15.80. Silver's up 11 cents. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are down 103. NASDAQ off 42. S&Ps are off 16. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. 8 o'clock in the morning to 6 in the evening, and get all that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go tfnn.com on your cell phone. You'll see the Tiger TV in the top right-hand corner. Hit it. You get the audio, plus you get the video. Now, as you're over at TFNN, what you're going to see in that carousel, you're going to see the gold report, 60 issues for $600. That's a 50% savings. What you get with that also is you're going to get an autographed copy of my book, The Art of Timing the Trade, the Ultimate Trading Mastery System. So what you get there, that's an $88 value. And what that celebration is all about, folks, is that on the 16th of this month, it's going to be the 660th edition of the Gold Report. So if you want to take advantage of that, you have about another you get you get 7 days to take advantage of that and get 60 editions for $600. We're talking about Mike from Thailand, and we're talking about First Majestic, which is AG. It's a silver producing company. The low is today $3.75. The high is $12.45. You know, I can see what you're looking at, meaning today, Mike, that you got a rejection of price. I wouldn't be biting on this just yet, though.
Yeah, I already did. I kind of wrote it on the way down.
Okay.
And the reason why I did is because you had mentioned I became real bullish on silver, you know, separately speaking.
Yeah.
And you said that Rob McEwen hung on to a lot of silver there, right? Am I right about that, or was that a different play there?
It wasn't Rob McEwen. AG is not Rob McEwen. It's First Majestic, okay? But that is Keith Niedermeyer, and yes, he did hold on to silver and did not sell it. That's correct.
Oh, okay, yeah. So I figured I'd bite on that just because I at the beginning of the month.
I understand what you're saying. So specifically what it was, folks, is this, is that the last 2 quarters, silver has been lower. The CEO decided that he was not going to sell the silver into the marketplace.
That's why I bought it, yeah.
Okay. So,
all right. Thanks.
This is what you have, okay? You know, listen, what I like to see once something gets down this far is a couple signs of strength first, and then you buy the pullback. You know, and this equity here hasn't had that happen yet. It doesn't mean that it won't, and it very well could be that this is a rejection today. You know, we'll see. If it is the rejection of lower price today, what you could expect is this. It got to a price point today of $3.75, folks. It's at 404. 404 does, one more penny gets it back inside the range. It's lower range, but it's 405. Then what you want to look for, Mike, is this. You're going to look for wide price spread with an expansion of volume to about 3.5 million. If you get that, that would be the first sign of strength that it would have. The difference in this chart here, and I follow this chart, I follow this equity big time. The difference in this and a few others is that a lot of the gold equities thus far have already had 2 separate signs of strength coming off the bottom, and they've pulled back with lighter volume, and today is a really great day for some of these gold equities. So, you know, we'll see where this shakes out. But
look at that volume today, Tom. What do you think about it today so far? You think we could?
Listen, I like what it's doing today, Mike. I was looking at this earlier because on Mondays I do the update to gold report. Tuesday the full one comes out, and I was looking at it. I like what's happening with it. I like what's happening with it. But as I said, I want to see it prove itself because this has not proved itself yet. You know, but. But you just might get it tomorrow morning, man. You know, my larger take on what we have happening here right now is that there's no doubt as this S&P has been pulling back, gold is going topside, the dollar looks like it's giving it up. If the dollar gives up at all tomorrow, right, you're going to see a very fast expansion in the gold market, the silver market, the metals market, because it's set up correctly. You know, the difference on this setup here, folks, in 2007 is this, is that gold has been in the lows, silver's been in the lows, dollar's been at the highs, S&P's been at the highs. The correlation is pretty direct, that the bonds have been going topside at every tick that the S&P comes back, the dollar's been going down, and metals have been going higher. So that is basically signaling that you have another basically change of trend in how the metals are trading in correlation to the S&P. That's what it comes down to. So, cooking, brother.
Hey, I really like the Den. The only problem is I can't find the mute button on it. You know, when I call in.
Well, there's a mute button. It's on your left-hand side. You just hit that. It's the first button on the left-hand side. You hit that button and you're all set.
Thanks a ton, Tom.
Okay, man. Have a great one. Have a safe one. You know, if we do go over to that, let's go over to that silver market right now. So if we take a look at silver, silver right now, we are at 1638. And, you know, silver's got to show that it can blow away 1683 in a big way, too, you know. So we'll see if we get that wide price spread accelerated volume. I certainly like what has been happening out here today, because the expansions inside the metals have been there. And the real key, the kicker out here, folks, is going to be like, okay, what is it all about? Does it mean that there's inflation coming down the pike? You know, we'll see. There's certainly enough money in the system for inflation to come down the pike. What has happened on a fundamental basis that I think is still going to be hard to change is the tightness of money, and will people release it inside their communities so that you have the velocity of cash going through it. You know, that's what has not happened. What certainly has happened in those job numbers that came out on Friday, however, is that the wage gains, that was one of the first times that we have seen wage gains that came in that were substantial. They were only 0.4%, but on a monthly basis, that's pretty substantial. You know, so we'll see if that's happening. But what absolutely does happen is that as you have that unemployment rate go down, as wages start coming up a little, you don't have to have that unemployment rate come down much more if, in fact, people want to be able to stay. Well, if employees want to stay at their job and get a raise, it's going to be easier when there's less folks in the pool. That's how that shakes out. So, you know, we'll see where that goes. Inside the housing market out here, what you are going to have is that Fannie Mae, Freddie Mac, depending where you are in the housing market, folks. FHA is always had 3% down. VA is no money down. Fannie Mae and Freddie Mac, as of December 17th, let me see if I can. As of December 17th, you're going to be able to put 3% down on a Fannie Mae, Freddie Mac, which is going to open up the first-time buyers. You know, they're claiming it won't open up in an extraordinary way. My own experience having the fund is that there are a lot of first-time buyers that actually don't understand how you can actually get a loan pretty quickly. That's what it really comes down to. So the regulations inside the Fannie Mae, Freddie Mac loans, which are 90% of the loans that get bought and sold out here, are going to change dramatically. I think it's the December 16th. Let me just see something. So what that's going to do, that's going to loosen up more money in the marketplace. And what that's also going to do, you can remember something, real estate, folks, only has to do with the signature on the line as to how much money can be borrowed. When you cut to the chase, that's what real estate's all about. You know, the only time that real estate can go up in price is when people can basically get more money. That's what it comes down to. The way these bubbles have always developed, and I've seen 3 of them, and we'll see another one, by the way, okay? You know, depending how long you've been listening, bottom line, it's a mind blower to me, but the bottom line is that every 15 years, 16 years, everyone forgets what happens. You get another bubble. They're always a little bit different, but it always comes down to the fact that money gets cheap. You can get as much money as you want. Then what ends up happening is that then it's what seat do you have? And what people are always trying to do is just buy something, flip something that is not cash flow positive. As soon as you are not cash flow positive, it's only a matter of year, 2 years after that particular point that the bubble bursts. So we're not even close to that. But, well, actually, you know, there's some cities that are. You know, Boston's probably one of them, you know, that I know specifically. Because, but the job structure up there is huge. You know, so that'll keep that sustained for a while. What may happen is that we may see them, like in 87, 88, you had a few different cities go south in a big way. And it was specifically for that. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. And we can expect not only a down market today, folks, but I would expect what you're going to see is an expansion of volume as we are heading south. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome, folks. Dow Industrials right now are down 108. You get NASDAQ off 46. S&Ps are off 17. And, folks, as you come over to our website at TFNN, what you're going to see right on the front, on the carousel, our man, Mr. John Logan, is going to be doing an outstanding webinar. It's this Tuesday, 6 to 7, 6:30 to 7:30, right here at TFNN. Now, this professional scanner that John has is incredible. What it does, folks, is this. It can analyze the market in multiple time frames across all indices, across all markets. Come over to our website at TFNN. You're going to see right in the front in the carousel, you can test drive it for 1 month, absolutely free. As you test drive it, when you hit that banner, it's going to bring you over to sign up for the TAS Market Profile Scanner. You're going to see videos that John did right underneath it. They're awesome videos. They'll explain how this works. John, each and every morning, puts a video out on our website, uses it on the website. Bottom line, check it out, folks, right on the front page. If you're a subscriber, which you can test drive it for free, you can be into the webinar on Tuesday. And at the webinar, John specifically is going to be showing you how to use the scanner. It's a very professional tool that at this point is being sold and used to Bloomberg subscribers, okay? Bottom line, John is with us at TFNN, is allowing the TFNN audience to use this scanner, and it's really cool. Check it out. Market-wise out here, this is what we have. In fact, as we're coming to this close, this is going to be the first day that we actually get an expansion of volume on the way down. So it's going to be interesting watching how this does shake out. We have 7 minutes left, and we're already at 588 on the NYSE. What happens, folks, is this. The NYSE will pile a couple $100 million in at the close. So we'll see how many we get in at the close. On the NASDAQ, what we're at right now, we're at 1.7. So the NASDAQ is already big volume. The NASDAQ's probably going to pile in somewhere about 1.8, 1.9. So what does that mean? Well, what it means specifically is that you have folks coming out of the market again. It gives you a higher probability that, number one, when we take a look at this S&P, that the S&P right now, the cash S&P is at 2059. The first lowest swing point is 2049. That's another 10 points down. That's saying it's going to go after that level. We go over to the NASDAQ composite. Inside the composite, what you have is that it looks like the composite wants to actually take its swing out. The composite, 4724. We hit 4722. We're at 4737. That also is expanding with volume. More than likely, what we'll see with the composite will jump the creek. If you jump the creek and have an expansion with volume, then you really got something happening, especially in the composite, because what that could very well do is leave an island top. But if this ever leaves an island top, and we are talking about from November 21st, that would be one heck of an island top. Because what you would have is that you would have about 12 or 13 days with basically a gap and leave them deserted up on the highs. We go into the Russell 2000. The Russell 2000 is the weakest indice. Gave it up on volume out here today. The Russell 2000, we're at 1168. That wants to go off the 1151. The benchmarks out here come down to this October 15th low. That's your benchmark out here. The XLE hasn't been able to hold that price. That came down there. You know, bottom line is came down, broke it, took it apart. We're at 76.96, so we're below it. XLE wants to go a lot lower. And those equities inside it, you know, basically, coming down with some juice behind them. Exxon is actually not that bad. Exxon's down $2. You're at 91.71, and you haven't even got into the low yet. It's going to get into that low, so it's just a matter of how it's going to come into that low. We go to take a look at Chevron. Chevron, a different ball game. What we have with Chevron, Chevron is breaking the low, and we've done 12 million shares. So this is pretty intense. Chevron had 15 million at the low. You get 12 million now, and you get an expansion that is happening. So Chevron wants to go a lot lower. Rig, we go take a look at Transocean, and these riggers, they get some big problems. Rig continues lower. You're at $17.10, and that thing wants to go to $10. What you will see, you'll see a huge contraction of the amount of money that's spent on drilling, folks. Okay, that's a natural. That's a natural when you're talking about. We just saw oil come off the $100, $105 levels, and you're trading at 63. We go take a look at the gasoline market and the unleaded market. Right now we're at 171, and this baby is on its way down to 155. That's going to put unleaded gas under $2, and that's going to put unleaded gas, folks, under $2 just about all over the country. It's just pretty wild. One of the targets wants to look at natural gas. Natural gas is down 4% today. We are at, okay, so let me see how this is trading out. Well, what you want to see in natural gas now is you want to see a sign of strength. I like how this is trading here. You're at 363. You've done 41,000 contracts. See, actually, 41,000 contracts is a little too much. That means that the bottom of today will get tested once again. That's how that is set up right now. The low of Thursday was 364, 39,000 contracts. And today you just come down with too many. So that sets up another push down into those lows, So that's going to be wild watching this whole thing shake out. Particularly, folks, because what you do have happening weather-wise this week, okay, is that it's going to be, there's a very large storm that is coming into the northeast. Hopefully this thing will calm down a bit. But there's some big winds behind this storm that's coming in. And I know even in Florida all week it's going to be like 65 degrees. Not that that's not cold. But if we get to be 65 degrees in December, what normally ends up happening is that folks across the country are pretty cold. That's how that whole thing normally shakes out. The XLF, let's go to the XLF because the XLF is crucial. Right now, it's up 12 pennies, or 24.94. That number is 24.91. So this is going to be interesting to see, can they hold that up coming into that close? And I suspect they can, because someone just goosed it. This is Tom O'Brien. This is TFNN. You stay right there, folks, because coming up next hour, we get John Logan that's going to kick us off right as soon as we start. Then I get Tigress Amy Smith, and then, of course, Chad Coco from TD Ameritrade Think or Swim. Dow Industrials right now down 100. Nasdaq's up 40. S&Ps are up 15. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 106, Nasdaq off 40, S&P's off 16, gold contract up $13.90, traded at $1,204 an ounce. Silver up 12 cents at $16.38 an ounce. Platinum up 10 at $1,233 an ounce. Light sweet crude down 277, trading at $63.07. And it looks like crude wants to go to $55, folks. Going to be pretty wild. Bonds. You had the 10-year and the 30-year reject lower price out here today. End up going topside. The 10-year up 9 ticks, 126.06. 30-year up full point at 142.15. Now, the 30-year, folks, is deep into the large bar from October 15th. That is saying that October 15th, here we come. That is a big number. That's when the bonds spiked 4 points. Higher bond price is what? Lower yield is lower S&P price. King dollar. King dollar down 165 ticks at 89.41. King dollar got to a higher high today. Pull back slightly. King dollar is testing the 2008, 9, and 10 highs. Euro. up 27 ticks at 123.11, and the yen down 76, trading at 120.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we're at 2059. Your lower swing out here is 2049. You had a slight expansion of volume. It did about 810 million. Bottom line, that's saying, number one, you're going to go into that lower swing point. If we take a look at the SPY, the SPY, what you have with the SPY, SPY closed out today at 206.61. We did 102 million shares. That's after making a high with 91 million. Your lowest swing point out here has 103 million. So you're coming into that lower swing with volume increasing. What I expect you're going to see out here tomorrow with the SPY, and if we get this, it's going to be a very large island top. If the SPY jumps the creek, meaning that if you wake up in the morning and the S&Ps are down, that is going to leave an island top out there from November 21st. That is a large island top, folks, because what you'd be talking about 12 days of trading, and when you jump the creek and you leave an island up there, it, number one, says you're going to get a pullback. Number two, most times that's a substantial pullback. Now, in the context of the SPY, what we also have is this. October 15th swing point. 191 is the high of it. 187 is the low of it. We're going after that. That's the number it wants to go after. If you want to see that correlation, the XLE today, oil, gas, and service, broke it. The XLE is down 325. 40 million shares traded, closes out at 77.03. The low of October 15th is 77.05. Inside the oil and gas sector out here, that baby got toasted and roasted once again. You had ExxonMobil. ExxonMobil actually wasn't down that bad, by the way. Exxon was only down $2. Chevron was off $4. If we go over to CVX, what you're going to see, this is busting the low with an expansion of volume. Where ExxonMobil hasn't hit the low yet. Chevron was down $4 today. That low is 109.10 cents, $109.10. The volume characteristic was 15 million shares there. You broke that today with 13 million. It's a price point of 106. I'm sorry. The low of October 15th, folks, is 106.65, so we're right at it. You know, we'll see whether, in fact, Chevron wants to jump the creek also and go south. So that sector has got absolutely smoked. You get Apache down 421 today. The ConocoPhillips is off 282. Oxy was down 465. Big numbers on the way down. Gold market, just the opposite. Gold, folks, rejected lower price out here this morning. Then runs topside with some nice conviction behind it. Gold right now is at $1,204. I suspect what you're going to get with gold, just as the bond market, gold wants to go reach up to this 1221 area. If we get some juice at 1221, you're going to be trading up at this 1256, and you're going to be doing that very quickly. What has happened in the gold in the market in particular is that as the S&P ticks back, gold has been ticking up. Intraday today, when the S&P basically just took 3 or 4 points down, gold went topside by $7 or $8. The oil market. We go take a look at oil. What we have with oil is this. Oil out here today did 296,000 contracts, breaking out the lows. This is going to $55. And now $55 in oil is the high of the low of 2008. You know, so what you have here is this. As we get down to $55, if oil gets inside the $55, it's going to be wild, because what that would be setting up is that you're actually going to go test the lows of 2008. When you're talking about heating your house this winter because it's getting cold out here, that also is going to get down dramatically. You had the gasoline market come down 6 pennies today, or at 171. That one wants to get on 150. What that would do is put unleaded under $2 right across the country, not just in a few spaces. The bond market, what we have with bonds, the 10-year and the 30-year want higher price. And I suspect we're going to see that very quickly. The spike of this October 15th level is a pretty intense spike. The yield right now in the 10-year is 2.2, and that's going to bring us to King Dollar. So first, if I put the continuous contract up into King Dollar, this is what you have. We hit a price point today of 89.56. We bring this back, and what you're going to see if you happen to be watching Tiger TV is that the highs that were generated in 2008 in the King Dollar was 88.49, 2088, 89.25, and then in 2009 we hit 89.71. This morning we got to 89.56. We'll see how this shakes out, if in fact it wants to spike that level of another, what is that, another 200 ticks. It's not even 200, 56, 66, 76. It's 150 ticks. We'll see if it wants to spike that level. Bottom line, whether it wants to spike it or not, my take is that King Dollar is topping out at this particular point. Why? Because King Dollar couldn't basically crush the metal market. Just wasn't there. Our phone number is 877-927-6648. Some of the high-volume stocks, and in this case, we had a higher volume on the way down out here today. You had Apple down 260. We had Halliburton down 171. Williams Company was down 337. Inside the Dow Industrials, the big mover inside that Dow was the oil stocks and Big Mac. You had Caterpillar down 353. ExxonMobil was off 212. You had Big Mac down 370. If we go over to McDonald's on a fundamental basis, folks, came in across the board with 6% less sales year over year, which is a huge number. Bottom line is that you come down with volume today. We did 11 million shares. This has been topping out since 2011. We are at $92.61. That's going to go after 88. And how we hit that 88 time frame, price point rather, is going to say, can it basically break down? But Big Mac looks like it wants to go into the 64 level for me. So technically, you get a $64 price point that it wants to go after. Fundamentally, you know, the amount of competition that's out there. The new fast food out there, folks, has to do with the whole Chipotle deal. There, you know, you get Chipotle, you get basically, and you know what's interesting about this? In the context of what that is all about, it's really about the old cafeterias of years ago. So you get the cafeteria, you get a cafeteria line, you got fast food in the back. In this particular point, Chipotle, they're saying it's local, fresh food that's getting distributed and getting distributed very quickly. So that is the competition for the Big Macs of the world, for the Burger Kings of the world. We'll see how and if they can change how they're doing business. You stay right there, folks. Tigress, Amy Smith from IBD is going to be coming up next. Dow Industrials finished down 106. NASDAQ off 40. S&P's off 16. Gold up 1360. Silver up 11 cents. Platinum up 10. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance, how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank's committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We ended our industrials finished down 106. NASDAQ off 40. S&P's off 16, as we do each and every Monday at 20 past the second hour. We have our Tigress, Amy Smith from Investor Business Daily. And, folks, if you haven't test drove either the newspaper or the website at investors.com, you can do it 2 weeks absolutely free. The way you do that, as you're at TFNN, just hit the banner on the right-hand side. You can take your choice of the paper edition, get it delivered to your house each and every day, or the digital edition at investors.com. And since we're all on computers, just go to the digital edition, folks. It's great. A lot of great tools out there each and every day. Amy Smith, what's going on?
Hey, Mr. Tom, I'm doing great. How are you today?
I'm doing great.
Good.
So you had a good weekend. You're at the IBD Master Workshop this weekend, huh?
We were. This is the IBD's highest level workshop. And
yes.
It was at the Fairmont Miramar. It's beautiful right down by the beach in Santa Monica. And what was interesting, you said, what's the mood out there? What's the mood out there? What are people thinking? We've talked about this a lot. And so there were a lot of high-end money managers there. A lot of them came back this year, very interestingly, Tom, because they found the entire year to be really challenging.
Okay.
And, if you're playing with a lot of money, big amounts of money, and you're trying to outperform the general indexes, it's been a tricky market, and it's kind of typical of an aging bull market. And you and I've talked about this, too. We're either 5 years into this or we're 3 years into this bull. And either way, it's just been a difficult time for people to make money, at least using sort of the growth stock strategy.
Well, I guess after last year, I can see what they're talking about. Because, see, what you have, folks, is that we're up 1,800 points, which is good. and the S&P. But the prior year, folks, what you're dealing with is that we were up 400 S&P points, okay?
Right.
So at 400 S&P points, what that does, no doubt, is mask over a lot of things.
And what happens is, a lot of people were in the right stocks.
Okay.
But they held on too long because they did not act typically the way we would think some of these stocks would. We had GoPro, and if you sold that correctly, you made like 70% or something. But if you held on too long, and especially like today, you're just giving back all kinds of gains. Same thing with Alibaba, same thing with Mobileye, and same thing with a lot of the leaders. It was one of those things where you needed to play small ball, take smaller profits, and you would have done better this year actually if you had done that, if investors had done that. So I just thought it was interesting. A lot of people are really feeling like this market is long in the tooth. Everybody really wants a correction and feels it would be really good for the market to get a nice shakeout.
Well, it's going to be interesting here. In the context, you had that October shakedown, and no doubt that is going to hurt performance, okay, because it's possible that some of those folks got out at that point. Today just may be the beginning of that again, so we'll see where that shakes out. You had the XLE basically break out those lows, so
right.
That's pretty intense.
Well, it's funny. I started some of my scripting actually yesterday. Like in the evening, I'll script it out.
Yes.
And then in the morning, I'll finish it out. It's funny. The thing that I wrote to you in the script was that we need something to happen. We're either treading water, maybe we're going to get more distribution and we're going to start correcting, or we've got to see leading stocks act better. And, of course, today you're right. Maybe this is the beginning of, we'll actually get a break and we'll get a pullback. It would not be unusual to see a pullback after we've gone this much up in the indexes, that's for sure.
No. What would be shocking, though, for the money managers is that this happened in December.
Well, it's funny. I also said, I think we talked about this a couple weeks ago. I said, did Santa Claus come early?
Yeah, you did. Exactly.
Did the Santa Claus market, it just felt, it felt like it, Tom. It felt like we'd had this rally early. And everyone's expecting we're going to run till the end of the year. And I don't know. We'll have to see what the rest of the week brings.
Yeah, no doubt. So when we take a look at good old Ultra Beauty is a little gap up, huh?
Well, Ulta Beauty, yeah, we women have to have our beauty stores. And Ulta, it's funny. See, this is a perfect example of something that's, it reported and it did well, and today it reversed. So, you had these gains. In fact, when it went up, it was up as much as like 7% on Friday, and it gave up some of those gains, gave up all the gains that it made today. We look at Taser, same thing. Taser gave back a whole bunch of gains today. I think some people that were up in some of these stocks, they'd made some profits, just said, you know what, I don't like the way things look. The growth out of China, growth out of Japan, things seem like they're sleeping, or they're slipping a little bit and slowing. So that we could see some profit taking, coming off the table here too.
Now, when we look at the current market, and I know, the IBD performance has to do with, growth stocks and an acceleration with earnings. So how is that shaken out this year?
It's not, it's funny. We have the IBD 50.
Yeah.
And, so we started this uptrend October 21st. We would expect that IBD 50 to take off.
Yes.
There's a lot of good companies in there that have, it's funny. They have all the things you just said. We've got some good companies in there with some good earnings. They're showing growth. There's nothing wrong with the company, and yet that IBD 50 is lagging. So that is a more risk trade, and what it really means is that the pros right now are not really they're not really stomping on the pedal to go into growth stocks right now. So we saw these indexes make the higher, and yet some of our really good names in the IBD 50 are really underperforming.
Well, that's what you have here, folks, is this. There's plenty of folks, Amy, that only look at the Dow Industrials.
Sure, sure.
And what's crazy about that, to me, okay, is that you're talking about 30 stocks, and inside 30 stocks, because of the weighting structure, you really only need 5 or 6 of them to move.
Right.
And, the bottom line is that the oils inside the Dow aren't even close to highs. We'll see what ends up happening with the banks, but you can see, McDonald's goes south today. So the Dow's going to have some pressure on it. So it's going to be interesting to see how this does shake out, because the Dow, no doubt, basically has been hitting highs every week, so.
Yeah, you're right. And, that's what Bill O'Neill always says, too, the founder and the chairman of IBD. He says exactly the same thing, Tom. He said, the Dow can be so easily manipulated.
Right.
So let's take a look at the S&P. That's a broad basket of stocks. The NASDAQ will typically have, your tech names and the big growth names.
Sure.
But, you can't go by what the Dow is doing. And I do get a lot of people that ask me that, wow, the Dow at a new high, what does that mean? And you need to sort of look underneath the hood a little bit more.
Yeah, there's no doubt. There's no doubt. And, what we haven't heard for a while, and this gets intriguing because I remember, at the beginning of, after the crash in 2000, folks would continually look at Cisco, look at Jabil, look at stocks that never have come back,
Never have.
No, and folks, so Amy and I are talking about it's important when you're doing your research, you're over at investors.com, look at those growth stocks, and then now pay attention when those growth stocks aren't going topside, because the reality is that when the market continues to go topside, they move, and they move much faster and further. That's just how that is.
Exactly. And then conversely, when the market is weaker, these stocks can be a lot more volatile. They can pull back a lot quicker, so you have to be careful. Just a good barometer of health, the easiest thing in the world to do on investors.com, I click on two buttons. There's stocks moving up on heavy volume, and then there's stocks that are moving down on heavy volume.
Okay.
And today, that really tells you what's going on. Because like I said, Taser and some other stocks that have made some good gains recently were just getting, they were really getting sold off. And that tells you that it's not really a good environment for growth stocks when you see that.
Yeah. And there's no doubt about that. Yeah. Well, listen, you have a great week, a safe week, and we look forward to speaking right back here next Monday.
Oh, thank you, Tom. You too. Take care.
Thanks. Have a great one. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to coming back with Chad Coco, option expert at TD Ameritrade Thinkorswim. Coming right back.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 106, NASDAQ off 40, S&P's off 15. As we do each and every Monday at 25 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Think or Swim. Chad has the best option show on the planet, folks. It's broadcast right here every Tuesday, 12 to 1 Eastern Standard Time. When you talk strategies, whether you're a bull or you're a bear, Chad can walk you through each and every one of those strategies, how they work, what you can expect from those strategies. And as you come over to our website at TFNN, folks, you're going to see the Think or Swim banner on the top, on the side. You can hit that banner, bring the account up. They will put paper money into your account. You can trade that paper money, see how this system works. I use Think or Swim and have for years, whether I'm trading equities, options, futures, or commodities. It's on one screen, and it's one execution platform. Don't forget, at TFNN, we do live programming every trading day. We start at 8 o'clock in the morning, go to 6 in the evening. We replay that programming. Chad is on tomorrow from 12 to 1 Eastern Standard Time. No matter where you are, you can get it right on your cell phone, tfnn.mobi. If you'd like to take a look at him on TV with the platform, just go to tfnn.com, hit the Tiger TV in the top right-hand corner. Chad Coco, what's going on?
How's it going, Tom?
It's going great, man. You having a good day?
Well, I've been in meetings all day, so not really.
Oh, that's always tough. That's always tough, no doubt. Well, you know, meetings are important to keep that company going forward in a big way.
This is too. We're doing a lot of new product development stuff, so it's kind of interesting stuff, but can't really do a whole lot with the market when it's having fun like it was today.
Yeah, and we get, not that we get a big pop-up in the VIX, but we get a couple points. You know, you're running at 1421. You know, it's just amazing to me, the VIX in general. Now, the market's not down that dramatically to have a nice little pop like this. You know what I mean?
Yeah, exactly. Yeah, it's usually when we see these moves and the VIX pops up and it's not a big move, it's usually pretty even on the call. The put ratio today, the put ratio is 2.0, well, actually above 2.0 on both the SPX and SPY, so kind of interesting. A lot of people buying puts.
Big number, yeah. Well, particularly because what we do have here, when we're talking about, coming into the end of the year, it's not like we have a lot of weeks left in trading. I mean, realistically, you get this week and next week. Now we're going to be open after that, folks, but the reality is that, if you're running big money, it's like you don't want to give any of this back, particularly after October. So it's going to be intriguing to see how this shakes out the next few weeks.
Yeah, exactly, yeah. The year's pretty much coming to an end, especially for all the big desks where those traders are going to be on vacation coming up real soon. So we'll see what happens.
Yeah. When you start off, let me ask, the retail investor, what Thinkorswim has been able to do is give these professional tools to the retail investor. And inside that context, what are the different dynamics they've seen that have changed, year by year?
The biggest thing we see is the number of people that are using options in their portfolio.
Okay.
Sometimes it's a stock replacement, or definitely it's a hedge, or trying to pick their target out for some positions. That increases more every day, pretty much.
And folks, so I want to walk you through this slow, okay? Because this is what's really cool. So when you have a portfolio, whether it's small or large, and you're not always dealing with margin. You're not going to deal with the margin in an IRA. But if you're dealing with a normal portfolio, you're dealing with margin. When you have your equities at TD Ameritrade, and then you're using options as a hedge, it's something that you want to understand, number one, and walk before you basically run like anything else. But what you're going to see, and this is where I've seen that it's really cool in the aspect that when you are actually hedging out positions, folks are actually surprised at the amount that it actually takes to have a defined risk inside the option market when they take their equity positions, when they take their margin, and then when they put the option on top of it, And it's really cool how Thinkorswim does that work. I mean, you don't have to know it upside down, but it does make a difference, right?
Yeah, it definitely does, especially if you're looking at something that's trading at the value now and you want to put a put to protect you against a big drop on that.
Yes.
If you're going to try to go at what the market's at now or go even a little bit higher, it's going to cost considerably less if you're willing to take a little bit of a hit on that position, but still protect yourself a bit.
Yeah.
That's how much insurance do you really want?
And insurance is the right word. That's right what it comes down to, folks, okay? What's so neat about it, and I know at the end of the year what happens is that folks always worry about paying taxes. And let me tell you something, folks. Chad, which is interesting is that in 1988, I learned more about paying taxes than anything. And it wasn't me personally. I had watched a couple guys that I was trying to buy a piece of real estate. And what happened is that we were on State Street in Boston at that point. And I had owned a nice place on State Street, and I wanted to buy another one. And I end up going into this meeting, and the deal was supposed to be done. I was supposed to buy the real estate, and it was big money. It was, in the millions, right? And what ended up happening is that we were at the table, and a couple of the sons got involved with the father. And they decided, and you got to picture something, folks, okay? This was about a year and a half before the bubble burst in Boston. And what had to happen is everyone was greedy. And so the sons had said that, no, you can buy the building, but then we want a certain percentage of the profit, and we don't want you to close until after January because we don't want to pay any taxes, right? So you can picture, I'm sitting there, I'm saying to myself, hold it, man, this is like getting really crazy now. I'm going to buy a building. They're going to tell me that they don't want to close until after January, and I want to close before that. Just because I wanted to. And then the context was that I was going to give them a percentage of the profits after the fact. Make a long story short, this meeting lasted about 30 minutes, folks. I turned around and says, you know what? Take your building. I don't want your building. I'm walking out of here. And they're yelling, no. I says, I'm done. Because I knew that. I knew two different things. I was over my head. I says, man, this is crazy what's going on. Bottom line is that I leave, and guess what? Within, the next year, the whole thing blows up, real estate in general. And the fact was, I was so lucky, number one, but I was saying, oh, my God, if you got profits, there's nothing wrong with paying taxes. That's what it comes down to. So where this is bringing us is at the end of the year here, what does get interesting is that in the real estate market, you can't get options to protect yourself. Do you know what I'm saying? But in the equity market, you can, which is so cool.
Exactly. Yeah, I can buy insurance on my portfolio. I can buy insurance on whatever position I have in my account for the most part.
Yeah, which is huge, because what happens, folks, is that there's plenty of you, and I understand that you don't want to, you consider yourself a much longer-term player in the marketplace. If you do that, check it out. It's tomorrow. It's noon time, noon to 1 Eastern Standard Time. Chad puts together not only a great program, but what they have a very huge skill at, folks, is setting up the strategies. And the platform itself, the TD Ameritrade Thinkorswim platform, is extraordinary because once you work through it, all the math is done. It's important that you understand what you're looking at. But the bottom line is that it's very clear, it's very concise. So, hey, listen, what's the weather like there?
For mid-30s and rainy. So
that's not bad. That's not bad, man.
I'd rather have it a little bit colder so it's snow and not have to worry about the umbrella, but whatever, I'll take it.
That's not bad. Okay, well, listen, man, we appreciate it. You have a great night, safe night, and, of course, we look forward to the show tomorrow morning.
You as well. Thanks.
Okay, man. Have a great one. Have a safe one. And, you know, as one of the Tigers said in the den, having to pay taxes on profits is a good problem to have. It absolutely is a good problem to have, folks. And depending where you are in the cycle of life, don't ever worry about it. You know, the bottom line is that you can always make more money. What does happen is that profits go away very quickly. You know what blows my mind? And this isn't just not in the trading business. Any type of business goes through cycles, and you got to wrap your head around that. And what you want to do is you want to plan out where you think you are in the cycle, and you might be off, you know, year and a half or something. That's cool inside the context of what you want to do, because inside of those cycles, when you're coming off a low cycle, coming into a higher cycle, you want to basically make decisions that are based on going back down into a lower cycle. That's just how it goes, folks. I suspect right now we have two different issues that are going on in the marketplace. Bottom line, the market's been running for 5 years. My take is that the economy is good. It's going to get better. That doesn't correlate inside, however, what's going on inside the equity market. Inside the equity market, that thing is stretched in a big way. We'll see what wants to basically push this thing lower. The interest rate structure itself, these interest rates are going to be coming down. And it's like, what is that all about? And all I can see right now out here, what that is about is that it's going to be a shift in the amount of money that comes into the bond market. The bond market in general, just so you can, on a fundamental basis, is still wicked expensive. You know, our 10 years is yielding 2.2. That is a monster yield in correlation to the world yields, folks. Okay, France is at 0.9%, Germany's at 0.7, Italy's at 1.9, Spain's at 1.7. That's insanity. If Spain can sell money at 1.7 and we're at 2.2, that makes no sense. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow finished down 106, NASDAQ off 40, S&P's off 15. And, folks, as you come over to our website at TFNN, what you're going to see right in the top of the carousel is a free webinar with our man, Mr. John Logan. And what it's all about is the TAS Profile Scanner. What this scanner specifically does is this. It scans the markets and in multiple time frames. And it analyzes these markets in multiple time frames. And when I'm talking markets, I'm talking about whether it's the equity market, the commodities market, the currency market, and then markets all over the world. But if we stay just with the U.S., you can scan sectors and specifically what it's doing is that it's showing you, are you above a market profile? Are you below a market profile? It's showing you what the breadth of the market is, and it's showing you what the breadth of the market is, by the way, on the dailies, intraday, weeklies, and monthlies. Okay, it's a really powerful program. Right now, that program, if you're on Bloomberg, you can basically pay and get that program. What John has done is he brought it to TFNN. He kicks us off every trading day, 8 o'clock in the morning. He's doing a webinar tomorrow night. Now, you can test drive this piece of software free. If you come over to our website and you sign up for the test drive today, before the workshop tomorrow night, you get it for 1 full month. What John's going to go over tomorrow night is how to use the piece of software, okay? As you actually hit the TAS profile scanner, what you're going to see is that you're going to see the videos that John has put together. He's done an outstanding job putting these videos together. Go over them. Check it out. This costs you absolutely nothing. Come to the workshop tomorrow night and go from there. John does kick us off every trading day, folks, right here at TFNN, 8 o'clock in the morning. He's got an outstanding show. Now, I got to read you this article because this article is unbelievable. So check this out. Okay, so what this article is all about is about life on Mars. Okay, you know that we've had the ship up there for quite a while. Okay, so check this out. For lifeless chemical compounds to organize themselves into something alive, scientists generally agree 3 things must be present: standing water and an energy source, 5 basic elements: carbon, oxygen, hydrogen, phosphorus, and nitrogen, and time, lots of time. In its search for environments where life might have started on Mars, the Curiosity rover has nailed the standing water, the energy, and the key elements with the right atomic charges. As a result, scientists have concluded that at least some of the planet must have been habitable long ago. But the period when all conditions were right were counted in hundreds of thousands of years, a very small opening by origin of life standards. That has now changed. The project scientists for the mission reported at a news conference on Monday, today, that the rover's year-long trek to Mount Sharp provided strong new evidence that the Gale crater had large lakes, rivers, and deltas, on and off, for millions to tens of millions of years. You imagine, it's a mind blower, folks, talking millions and tens of millions of years. The geology shows that even when surface water dried up, plenty of water would have remained underground. Moreover, the team concluded numerous delta-like and lake-like formations detected by orbiting satellites are almost certainly the dried remains of substantial ancient lakes and deltas. None of this proves that life existed on the planet, but the case for an early Mars was ripe and ready for life has grown stronger. As a science team, Mars is looking very attractive to us as a habitable planet. Not just sections of the Gale crater and not just a handful of locations, but at different times around the globe. Let's see. Another missing piece of the story has been the inability to detect organic compounds, the carbon-based building blocks of life. That, too, may soon change. Last spring, several Curiosity team members reported the detection of some simple organics that appeared to be Martian. The findings were not definite, but NASA has scheduled a news conference December 14th at its annual meeting of the American Geological Union with new information about the search for organics. Our original interpretation that there was a good chance that the organics we were seeing are Martian hasn't changed, said Daniel Gavin. This interpretation will be expanded on December 14th. Curiosity does not carry life detection instruments, in large part because there is no consensus on what such an instrument might find. A finding of life based on what first appeared to be metabolic activity detected during the Viking missions of 1977 was so controversial that the NASA ultimately rejected it. So scientists have been using a variety of tools from geology and other earth sciences, organic or mineral chemistry, I'm getting lost a little. Okay, determine whether life could have arisen and survived in the Gale crater in other locations with similar characteristics. Another member of the team... Okay, so check this out. For the first billion years, he said, both planets had stable environments that could support life for substantial periods, and both are still share the same chemistry and process for altering rocks. What they're talking about now is Earth and life. There is a general scientific consensus that life began on Earth some 3.8 billion years ago. If that's not a mind-blowing, nothing is. I can't even comprehend that. Can you imagine when you look around, you wake up in the morning, that we've been around here for 3.8 billion years? Okay. So there's a general scientific consensus that life began on Earth some 3.8 billion years ago, and Dr. Simon said that it was clear that the same could have happened on Mars. Or, as Dr. Grumfeld puts it, what I get excited about is imagining a Mars 3.5 to 4 billion years old, a planet with thick atmosphere, maybe a blue sky and puffy clouds and mountains and lakes and rivers. Many similarities disappeared after Mars, a much smaller planet, lost much of its protective atmosphere by the end of the first billion years. So searching for possible Martian life involves digging deep below the surface, and detective microbiome remains billions of years old. Bottom line, folks, it's pretty incredible reading through this, and this just came out this afternoon. When you start talking about billions of years that we've been around here, and what our life expectancy is 80, 90, 100 years old. It's pretty amazing. Pretty cool, though. I mean, there's no doubt about it that and you talk about getting your mind blown. If, in fact, they ever find any life on Mars, that would be absolutely amazing. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Remember, yesterday's gone. Tomorrow's not here. What are you doing right now? That's what it's about, folks. Go for it. Here and now. Have a great one. Have a safe one. Look forward to speaking to you right here tomorrow. Go get them, folks.